Hey guys, it is Julie here with TipRanks, and today we're talking about Google and Microsoft. So let's get into it. Alright guys, welcome back and thank you all so much for being here. Earnings season is underway with big name earnings reports rolling in, and today we're taking a look at two of the biggest names in the game with Microsoft and Google. Now, Microsoft is falling despite an earnings and revenue beat, so we're going to take a look at what's happening there, plus the good results behind Google's rise today. And of course, we're going to see how those Wall Street analysts are weighing in on the stock as well, as we have a ton of reiterated price targets coming in just today. Of course, you can follow along over on the TipRanks website or by downloading the TipRanks mobile app by using the link in the description down below. Now let's kick things off taking a closer look at Microsoft. The MSFT stock is currently trading at $335 per share, and you can see they took a big dive here at the start of today following their earnings report, currently down 4.5%. And if you're just looking at the headlines today, you might be a bit confused, as Microsoft did come out with earnings ahead of expectations, plus a revenue beat. For their Q4, Microsoft delivered earnings per share of $2.69, coming in 14 cents ahead of analyst expectations. And they had a beat on the revenue side as well, with $56.2 billion, and that increased 8% year over year. Their CEO commented that organizations are asking not only how, but how fast they can apply this next generation of AI to address the biggest opportunities and challenges they face, safely and responsibly. We remain focused on leading the new AI platform shift, helping consumers use the Microsoft Cloud to get the most value out of their digital spend and driving operating leverage. But there was some further commentary surrounding AI that has stirred up a bit of disappointment. Their chief financial officer, Amy Hood, said that the process of making money off of AI services would be gradual. And on top of this, Microsoft's management seems to be contemplating only modest adoption to their future outlook. And that underwhelming future outlook is certainly also weighing on the Microsoft stock today. Microsoft called for lower revenue guidance than analysts had predicted, partly because of weakness in the segment that contains Windows. For cost of revenue, they're anticipating growth rates to be higher than 2023, and operating margins are expected to remain flat year over year. Across several categories, they're anticipating growth in the low to mid-single digits. But despite the dip in the Microsoft stock today, analysts seem to be bullish for the long term. We've already had 10 analysts reiterate price targets, and they all pretty much come in with a buy besides one hold. One analyst from RBC Capital increased their price target to $390, noting that the stock likely fell after hours due to investors being too optimistic on the timeline for cloud optimization headwinds to abate and AI tailwinds to kick in. They note that Microsoft's multi-year reacceleration story remains intact and will likely start to show up in the second half of the year. One other analyst increased their price target, noting that their results were good, but that expectations were quite high going into this report. And therefore, the modest sell-off after the report came off is not a surprise. The firm expects the stock to be influenced near-term by investor sentiment around the timing of the AI revenue ramp. And we also have an analyst from Wedbush who increased their price target to $400 per share. They believe that Microsoft is in the early innings of a massive penetration of AI and cloud that could conservatively approach 50% of its global installed base over the next 3 years. Overall, the Microsoft stock does come in as a strong buy based on 34 analyst ratings. That breaks down to 31 buys, 2 holds, and 1 sell, with an average upside of nearly 13%. Down below, we can see all of those ratings that were just reiterated today. Of course, on the low end, we do have that hold rating with an upside at 5.6%, many of the price targets ranging around 16 to 20%, and a high end of 23.5% coming from Morgan Stanley. Now, shifting gears over to the Alphabet or Google stock. Trading under the ticker GOOGL, their stock is currently sitting at $129 per share. You can see they jumped up following their earnings report last night, currently up 5.85% today. And as today's gains may suggest, the Google stock did come out with both an earnings and revenue beat. They reported Q2 earnings per share of $1.44, coming in 10 cents ahead of analyst expectations. And revenue of $74.6 billion grew 7% year over year, beating expectations by $1.84 billion, so a pretty substantial beat there. Their CEO noted exciting momentum across their products and the company, driving these strong quarterly results. saying that their continued leadership in AI and our excellence in engineering and innovation are driving the next evolution of search and improving all our services. With 15 products that each serve 500 million people and 6 that serve over 2 billion each, we have so many opportunities to deliver on our mission. In their earnings call, they did focus on their continued leadership in artificial intelligence, stating that this is their 7th year as an AI-first company, and we intuitively know how to incorporate AI into our products. Large language models make them even more helpful, models like Palm 2 and soon Gemini, which we're building to be multimodal. Since their May launch, they've boosted serving efficiency, reducing the time it takes to generate AI snapshots by half, and they work on delivering even faster responses over time. They're also testing and evolving placements and formats and giving advertisers tools to take advantage of generative AI as well. Google has also had 10 analysts reiterating price targets just today, all coming in as buys plus one hold. One analyst at Truist raised their price target to $160. They said that the quarter reflected faster recoveries for search and YouTube and sustained momentum in cloud as the management reins in costs and focuses investments on the highest growth priorities. They expect to see further growth acceleration in the second half of the year along with improving margins. Overall, the stock has 32 analyst ratings, coming in as a strong buy, based on 27 buys and 5 holds, with an average price target of $136. Looking at all these recent ratings from today, though, we do have a lot more bullish outlooks. Of course, on the low end, we have that hold rating with an upside just below 2%, and then many others in the mid 10 to 20% range, with a high-end price target of 23%. So that is a quick overview of both the Microsoft and Google earnings reports and how analysts are feeling about the stock's future. Let me know your thoughts in the comments down below. How did you react to these earnings, and do you agree with the analyst forecast here? I always appreciate hearing from you guys. Please keep in mind these videos are never a suggestion to buy or sell any specific stock, just keeping you up to date with what Wall Street analysts are looking at and providing some information and entertainment. If you made it to the end of today's video, don't forget to hit that thumbs up button and make sure you're subscribed to the channel as well. Thanks so much for watching. Have a great day, and I'll see you back here next time.